Good afternoon, everyone. It's Chris from Axel as well as Solstice. You can find us on X, Instagram, Discord, as well as YouTube. The weekly video on YouTube is for free for everyone. You can subscribe, share with your friends, give us your commentary, let us know what you think. And remember, we're not a broker-dealer. Past performance doesn't give us any indication of our future results. Use at your own risk, and you can get in contact with us at the following number, 949-414-8484. The most important, we trade side market, up market, as well as down market. And remember, trade what you see on the charts, not what you think. Let's go to the first slide up here, and I have the market profile on the Nasdaq 100. You can use the QQQ, the SPY, but I use the micro NQ, which is giving me the prior day range on Thursday as well as Friday's high and low for the day. We mark the previous day high, we mark the previous day low, and the midpoint to know where we are. Or you can do a retracement of a Fibonacci or measured move. The most important thing is to understand that the market profile, this is a market profile which has the volume on the left, the monkey bars on the right, to tell us if the sentiment is bullish or bearish, if we're trading inside the range, above the range, and so on and so forth. As you can see here, in the previous day, we had a value area high on the volume profile, point of control, or where most volume is, and the value area low is on the left, showing you the canyon and the valley. Where there's valley, there's low volume, and the time spent, which is the TPA, you can see it's got a number 4 and 5 here. There was a little bit of volume. When we came back on Friday, we tested this area, bounced on that large volume gap, and rallied back up into the close on Friday, previous day low on Friday. At the same time, we can see the where the most time spent in the overnight in relationship to the whole 24 hours between the European and Asian market, the time spent was lower, and the value low on the time spent was lower, and this is the value area high on the time spent in relationship to value area high and value area low on Thursday, and vice versa. Here you can see I did not mark the value high here or the value low and the point of control, which was lower, but the time spent here was higher. If I take the highs and low, my 50% sentiment is supposed to be bullish, but if I end up on Monday opening up and falling below the previous day low, and I cannot go back up, the sentiment is bearish. But if I touch the previous day low, I go in it and I go back up, then the sentiment changes to being bullish. And if we continue higher or not, trade what the charts offer you. The next slide I have here, I put the E-mini, which is the Fortune 500 company, the 10-day range. You can see we've been consolidating in this range, looking above, looking below, looking above, looking below, but we are still in an uptrend. But you can see this is a very important number, 6,315. If I end up losing the Friday level in this consolidation where most of that volume was in the previous week, I'm expecting there's going to be continuation to the low side. But if I do break the Thursday's high and the Tuesday's high, and this was when Trump announced that he's gonna fire Jay Powell from the Federal Reserve Board, and he backed off, the market rallied back up on a wick higher. So we're gonna trade what we see, not what we think. And this level is very important. The 62.70 area to 58 is very important area. If we end up below it or we stay above it, and we stay above the 63.20 area, pay attention to it in the coming week. Most important thing is remember to check us out. Give us your commentary. Let us know how we can assist you and help you for you to get better and improve your trading goals as a trader. Let's go to the first slide I have up here, and I put the Mega 8. The Mega 8 consists of Apple. You can see it here. I've got the Nasdaq 100. I've got Apple in the Mega 8, Amazon, Alphabet, Goog, and Google, Facebook, which is Meta, Microsoft, Netflix, I've included Netflix. Netflix reported on Thursday, and their earnings were a little bit slightly off, so it sold off. And NVDA sold off a little bit, as well as Tesla was positive. But the Fortune 500 company has 11 sectors in it: energy, discretionary, financial, utilities, material, consumer products, info technology, real estate, industrial, healthcare, as well as telecommunication. But on the Mega 8, you can see that we've had for a while a lot of consolidation here on a grind higher for 15, 20 days, rally up, and we consolidated for the last 10, 15 days. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Let's call this 13 days inside this range, and the prior one when we looked up and we failed. We are hugging the 18, but we closed below the 18 simple moving. We are in an open cone. This channel is very important, that control point on these combination in the 50 simple moving average. If we end up falling through, I'm paying attention to that 50 and that big large consolidation here because it's got volume. If not, I look for the backside of that retracement around the 20% in the combination of those instruments. So if I'm going to go and look at individually, just Apple by itself, aapl, and the reason why I wanted to show Apple is that it's been consolidating. If you look at the December high, then we had the January low, then the rally up in February, then the April lows, then we consolidated from here on. We have not been able to take this candle, which is this large gap in here. We have a large gap. If I get a box in here and I do show it, this is a very important thing to pay attention to in Apple. You can see where it is. I'm just trying to show it to everyone here. Until you clear this gap, Apple is in consolidation. If it cannot continue, I'm looking for the backside of the retracement of the 50 in these consolidations here before I make a decision to purchase Apple. So is there a little bit of divergence in the RSI? Still strong, continuing higher, and I do have that downtrend channel on it. It's trying to break up. If I break the 116 SMA and I continue up, I'm looking to fill this gap. If it falls through, I'm looking for the 50 SMA and eventually F5, which is that larger consolidation here at the 196. I hope Apple is showing you the road. I know a lot of the high-tech sectors are high flyers. If I look at the XLK in the tech sector itself, you can see we created a nice high. We consolidated, we broke up, consolidated for a while, and this was the Wednesday. Look below, missed the 18 SMA and continue high, but Friday sold off a little bit. That's an XLK, and I want to show RSP, the value in the S&P equal weighted S&P 500. You can see the majority of the S&P 500 has not broken up. You can see the consolidation. We're trying to look up and we have not cleared the December high. So that's very important, and I will show you QQQ. I'm trying to keep it simple and easy to read. You can see in the Nasdaq 100 after that December and February highs, we rallied from this area and broke up. That was the 100% retracement from the prior year high to low, which is this high. We broke above it. If I zoom in here, we have this big professional gap. We filled this gap in here. You can see it was this candle. We rallied up. We got this gap here. So we got one gap here, two gap here. This was filled, this gap up here, but we consolidated for over 15 days, rallied up, but we sold off a little bit on Friday, holding the 5 simple moving average. If I end up losing it, I'm looking for the 18 in this consolidation for the first small bounce for continuation. If not, I'll look for the backside of this channel and the prior annual high in this gap in here in the QQQ. And the RSI still continuing. We are in an uptrend. As you can see, if I connect these two control or signal alerts, these 2 points lows, we're still in an uptrend, even if we come back and retrace to this area. So this is very important. I'm going to show you how to do the measured move in the micro ES and the small cap. I'm going to backslash micro ES, which is the Fortune 500. You can see when we called the 5145 was a long, and eventually the 5666 was the tariff noise. When we fell down in the April rally, we continued higher. We coming to the backside. You can see this linear regression channel down here, and there's one up here. These go way back in on the charts from 1/6/2022 to 12/16/2024 highs, which is up here. We are in an uptrend. If we go to it, touch it in reverse, or if we reject it and come back in, it is still, you got the 50 SMA. We're starting to get closer because the 50 is catching up. The 18 is right here. Every time it hugged, it bounced off. This time, this was the Wednesday hug, rally up, but Friday sold off. If there's going to be continuation, I'm looking for the backside of this channel continuing higher and reverse back in. Or if we fall through, I'm looking for the range between the high and the low, between the 18 and the 50, the midpoint of it, and that would be around that 6,175 in the S&P 500. So let's go do the measured move. We're going to go in an intraday. On a daily, we're going to go 10 days. It doesn't matter. We can use either 4 hours or 6 hours. It doesn't make a difference. So 2 hours, I can show you a 10-day 2-hour as well, because I don't use that as often. I usually use 4 and 6. I hope this system is still up. You can see this week's high where it was on Thursday in the overnight action, and the low that happened on Wednesday due to the announcement from Trump saying, hey, I may, and getting rid of, then he laid off, then things rallied back up. You can see we are waiting in 2 weeks from now, not next week. On Wednesday, the following week, on Wednesday, we are waiting for the Federal Reserve Board announcement and the interest rates. We have to pay attention to it. I can expand it to the left. You can go back as far as 7-1. So you can see that the sentiment where the Fibonacci's and the consolidation of those areas where the 50% and the 116 meet, and the 80% down here, the 20 down here to the 0, and vice versa. And that's the 200 SMA on that 2-hour. You can do the same thing 2K or we'll do the IWM this time, IWM. You can see where the IWM, the prior week's high was, and the low of this week. So I usually grab only the week from Sunday through Friday, the range, and I extend it to the right. And this is my levels for the small cap. Edit the property. You got the extension from 0 to -100 and vice versa, 100 to 200. And I usually extend them all the way back. That way you can see where those levels are on the charts of the Russell 2000. This area is very important, consolidation where the 50 is. And if I end up falling, I get the 61.8 and the 200 catching up for a bounce. And if I do fall through the Friday's low and the Thursday's low, I would look for the Wednesday's low, and vice versa. If I'm going up, I look for the extension above these 2 points, looking to the 50 and eventually the 200 to the top, and vice versa to the bottom. So I hope this video was very helpful. I want to show you IEI, which is the interest rate 3 to 7 year. You can use the 10, and I wanted to show this on a daily chart to show you, hey, we are in consolidation, haven't been able to get out of the yield because it's about 4.7 on the 10-year treasuries, and the 7 is about 4.62. So we can see that the ranges here, we've been range bound, haven't been able to break up in the bonds to get interest rates lower. When interest rates go low, par value of the bond goes high, and vice versa. When the par value of the bond goes high, interest rates go low, and if interest rates go high, par value of the bond goes lower. So let's see what would happen when J. Powell announces it in a week and a half. So let's go last but not least, the SP. And remember, take a look at all these sectors in the S&P 500 to keep you out of trouble. We do have this gap. If I zoom in here, I'm going to show those 4 gaps in here. If things do change, you've got 1, you've got 2, You've got 3. You've got this 4th one, which is filled, no longer valid. Remove it. So I'm going to zoom from here all the way to the right and pay attention to these 2 gaps and the 605 in this area and the backside of this channel. In case we're going to lose the Friday's low, I would look for Wednesday in the 18 SMA, and eventually if I break through, I look for this gap and the consolidation at the 605 in the S&P 500, and the 50 SMA will catch up for the first bounce and will fill up this gap. If not, we continue lower for this consolidation where there was a little bit more consolidation where it was tested here, the breakout of it, retest, look above, fail, retest, and break up. So this area is very important at the 592 in the S&P 500. If you have any questions, once again, get in contact with us. We're here to help. Take care. Over and